do you price Tesla at this point? Because it's not a value stock with the PE at 50. It's not a dividend stock. It's not a growth stock with earnings declining. So how do you price it? Hi guys, it's Stock Harry, and Tesla earnings are out. We're going to go over the numbers as well as some other earnings that came out today. I've also got some stock market news that you need to know about, and I'm going to give you my updated Tesla price prediction. So let's get into it. Let's get things started with the earnings that came out today, and then we'll get to the stock market news that you need to know about. Morgan Stanley shares initially fell after reporting rising expenses and declining revenue. Now, what's interesting about this is that earnings came in at $1.70 per share versus $1.62 expected, and revenue came in at $14.52 billion versus $13.92 billion expected. So Morgan Stanley actually beat earnings expectations on both earnings and revenue. Yet, the stock price fell initially. Now, in the past, the market has ignored the fact that earnings and revenue have been declining, and they were just focused on whether or not companies could beat their already low expectations. However, that doesn't appear to be the case this earnings season. So far, in the first week of earnings, what we have seen is that companies who come in line with expectations, their share prices end up going down because the fact is these companies are seeing a revenue decline, they're seeing an earnings decline, and beating estimates saying, well, our earnings didn't go down as much as we predicted, or our revenue didn't go down as much as we predicted, so therefore our share price should go up. That's just not cutting it this time around. And we're seeing companies actually sell off even if they beat earnings expectations, because it appears investors are now more focused on the fair value of stocks and the actual amount that the stock should be trading at based upon the earnings, and they're less interested in what the analyst expectations are. Still, Morgan Stanley shares were able to recover throughout the day and managed to close the day up 0.6%. Now, IBM also reported they had some pretty interesting earnings. Their earnings topped estimates as their margins expanded. But what's interesting about IBM is that revenue came in at $14.25 billion versus $14.35 billion expected. So revenue was actually a miss. But because their margins increased, IBM was able to see an earnings per share of $1.36 versus $1.26 expected, which was a pretty big beat thanks to those increased margins. IBM share price was up over 2% as of the recording of this video. All right, now let's get into Tesla earnings, and I'm going to tell you right now, I'm going to be honest with you, I'm going to give you the facts, and I'm going to give them to you straight. If you're a Tesla fanboy, you're not going to like these earnings. It is what it is. I didn't come up with the numbers. Tesla did it to themselves. Let's take a look at what's going on. Tesla's net income and earnings dropped by more than 20% from last year. Now, what's interesting is earnings and revenue did come in line with expectations. Earnings came in at 85 cents per share versus 85 cents expected. Revenue came in at $23 billion versus $23 billion expected, right in line with expectations. The problem is net income was down 24% from last year, while earnings were down 23% from last year. Now, here's the problem with that. Tesla currently has a PE ratio of 50. Tesla is priced as a growth company that's going to see a 40% year-over-year increase in earnings for each of the next 15 years. But Tesla isn't seeing a 40% increase in earnings. Tesla isn't seeing an increase in earnings at all. In fact, earnings were down over 20%. So how do you price Tesla now when earnings are declining? Well, I'm going to give you my fair price on Tesla, and we'll talk about where I think Tesla might actually get to in just a minute. But first, let's dig into the numbers a little bit deeper to try to understand why earnings are declining when revenue is going up. To put it simply, Tesla's earnings were crushed by their price cuts on their vehicles. We just talked about how IBM saw a decline in revenue, but they saw an increase in earnings because their margins increased. Well, Tesla is the exact opposite. Tesla saw an increase in revenue as they delivered more vehicles, but they saw a decline in earnings because their margins went down. And we saw IBM's share price rise on that increase in earnings. We saw Tesla's share price fall on that decrease in earnings. And if you think Tesla learned their lesson about price cuts and that hurting earnings, you're wrong. Tesla cuts their US prices for the 6th time this year, right before they reported first quarter results. The announced price cuts sent the shares down 2% on the day, and the drop in earnings when they reported their earnings after the close sent the share price down an additional 4%. So not only did Tesla's earnings decline because they were cutting prices, they went ahead and cut prices again, which means earnings in the future are probably going to decline even more. So how do you price Tesla at this point? Because it's not a value stock with the PE at 50. It's not a dividend stock. It's not a growth stock with earnings declining. So how do you price it? I mean, it doesn't fit into a dividend portfolio. It doesn't fit into a growth portfolio. It doesn't fit into a value portfolio. It doesn't really fit anywhere. Does this mean people are going to be selling Tesla and getting rid of it? Well, I don't think that's going to happen quite yet. So when I go to set my prediction on where I think Tesla's share price is going to be, I have to keep in mind the fact that Tesla still has a lot of fanboys who don't care about the valuation of Tesla. They don't care about the growth, or in this case, the lack of growth. They don't care about anything that deals with the fundamentals at all. They just buy Tesla because it's Tesla. So how do you price it? Well, I would give my fair valuation on Tesla at around $60 a share. Now, I've been through this before. This isn't the first time I've given this price prediction. And did Tesla shares get down there? No, they rallied to $200 a share. Because like I said, people don't care about the fundamentals. They just buy Tesla because it's Tesla. So how low do I think the share price will actually get to? Yeah, I'd probably give it that 52-week low at around $100. I don't think we're going to get much lower than that. We should, but I don't think we will. So just keep that in mind. If you have a value portfolio, Tesla doesn't fit because it has a PE of 50. If you have a growth portfolio, Tesla doesn't fit because they're not growing, they're declining. And if you have a dividend portfolio, again, Tesla doesn't fit. They don't have dividends. So where does that leave Tesla? Well, it leaves it to the fanboys, the retail investors who buy Tesla just because it's Tesla. They don't care about the valuation. They don't care about anything. They're just going to buy the stock. And I think a lot of the large institutions, the pension funds, the hedge funds, a lot of the large institutional players who are holding Tesla stock, they're going to look at this. They're going to realize earnings are going down. They're going to realize Tesla isn't this dream boy of a stock that it used to be. And they're going to start dumping it. And I think that will be enough to get Tesla down to $100 a share. And I think as it gets down there, retail is going to say, we don't care about the fundamentals. We don't care about anything. We just care about the fact it's Tesla. And they're going to buy the stock and they're going to keep it from going any lower, even though fundamentally it's a $60 stock. All right, that's going to wrap up the earnings that came out today. Let's talk about the stock market news. The first thing that you need to know is that inflation is starting to come back as the global rice shortage is set to be the biggest in 20 years. What initially caused all of this high inflation to begin with was a lack of supply, major supply chain issues. And now, with a global rice shortage being the worst in 20 years, and that's going to bring the supply chain issues back, which means food prices, they're going to start going back up again, which means we can expect inflation to rise as well. And all of this inflation has caused interest rates to rise, as well as mortgage interest rates rising because the Fed is selling off their balance sheet, and the sell-off of their mortgage-backed securities is causing mortgage rates to increase. And all of that increase in rates has caused the mortgage demand from home buyers to drop 10% as interest rates jump. The average interest rate for a 30-year fixed mortgage is now at 6.43%. And this decline in mortgage demand is expected to cause housing prices to continue to go down. And if housing prices go down too much, then we're right back into the great financial crisis like we were in 2008. We're not there yet. We're definitely more in a 2007 time period, but we are in the early stages of a major financial crisis. And that strong labor market that bulls keep focusing on continues to weaken as Meta has now started their latest round of layoffs, focusing on technical employees, saying goodbye to some 10,000 technical roles. I'm not sure how Meta is supposed to grow as a company if they're laying off all of their software engineers. So much for the metaverse, I guess. And layoffs aren't just limited to the tech sector, as ESPN also begins their layoffs early next week as part of Disney's plan to cut costs by laying off some 7,000 jobs. We had talked about how the layoffs that started in the tech sector would eventually expand to other sectors of the economy, and we're definitely starting to see that. And as bond yields start to rise once again, Bitcoin and Ethereum have started to fall. Bitcoin was down over 3% today, with Ethereum down over 5% as of the recording of this video. Now, with Bitcoin and Ethereum both up over 70% year to date, a 5% sell-off is fairly minor in the grand scheme of things. But it's kind of hard to say if this is just a pause in the continued bullishness on crypto, or if crypto's topped out and now it's starting to sell off again. Not really sure which way crypto's going to go, but definitely a cause for concern here with today's sell-off. Now, if you want to make money with us as the market goes down, one of my coaches who's made over $40,000 in the past 6 weeks is teaching you how to trade options in my We Profit Day and Night coaching program. Of course, I'm in there as well, but I do have other coaches who are extremely successful traders who are there to teach you and help you out as well. That way you get multiple different trading styles that you can learn from, and then you can find the best style that works for you, because what I do may not work for you. And what another coach does may not work for you, but between the four of us, somebody's going to have a trading style that will work for you, that you're going to like and you're going to be able to make money with. So if you want to learn how to trade options and make money, even if the market does go down, come join our We Profit Day and Night coaching program. You can schedule a call with my onboarding specialist to get more information on the program at weprofitdayandnight.com. That's weprofitdayandnight.com. If you got a lot out of this video, then be a good friend and share this video on your social media pages, and share the word and kind of explain to people why Tesla should be a $60 stock. Even if you don't believe it yourself, let's get the conversation going. Let me know in the comments below what you think Tesla will actually get down to, as it has now started its sell-off. And don't forget to hit the like button and subscribe. And if you missed yesterday's video where I went over a lot of really important information on what you need to watch out for during this earnings season, make sure you watch the last video here where I explain why earnings are lying to you.